Hello and welcome to CIA News. Tomorrow's crypto news today. In our first article, we see that IMF Chief Lagarde, distributed ledger technologies are shaking the system. International Monetary Fund Managing Director Christine Lagarde has said that blockchain innovators are shaking the traditional financial world and having a clear impact on incumbent players. Lagarde observed that financial disruptors are having a clear impact on incumbents and reshaping the system from within, pointing to JP Morgan Chase's move to launch its own digital coin, as well as new ECB initiatives or European Central Bank initiatives that aim to provide instant, virtually cost-free value transfers. I think the role of the disruptors and anything that uses distributed ledger technology, whether you call it crypto assets, currencies, or whatever, and it's far from the bitcoins we used to talk about a year ago, that is clearly shaking the system. She further noted that the transformative potential of blockchain-based technologies and assets have been broadly embraced by regulators and central banks, who she said recognize the positive effect new inventions can offer for the business model of commercial banks. We have to be mindful of two things: trust and the stability of the system. We don't want innovation that would shake the system so much that we would lose the stability that is needed. As reported, Lagarde has previously characterized crypto as being somewhere in between a fad and a revolution, and said that crypto markets must be regulated by the same laws that apply to the traditional sector in order to protect consumers and safeguard systemic stability. Lagarde has previously affirmed her belief that crypto regulation is both inevitable and necessary, yet she has equally advocated for the positive role that cryptocurrencies can play for driving deeper financial inclusion and offering an alternative to failing national currencies. Interesting. Here's the chief of the International Monetary Fund, the central bank of central banks, now coming out and saying that Bitcoin is just the beginning, that distributed ledger technology is shaking the system, and that regulators and policymakers are taking to the new system and actively litigating in order to fit a structure or form for this new form of finance in today's world, a combination, a merging of the two systems, as we've said in previous analysis, now coming to fruition and being spoken about by the head of the International Monetary Fund, the central bank of central banks. And at the same time, the IMF and World Bank launched educational blockchain token. Interesting. The International Monetary Fund and the World Bank have launched a crypto token called Learning Coin to better understand how blockchain technology works. The two institutions said that the coin would have no monetary value and would not be made openly available. To support the token, the IMF and World Bank have also launched a private blockchain network. The project is aimed to build a strong knowledge base around blockchain technology among staff and the organizations. The IMF said in the report, the development of crypto assets and distributed ledger technology is evolving rapidly, as is the amount of information surrounding it. This is forcing central banks, regulators, and financial institutions to recognize a growing knowledge gap between the legislators, policymakers, economists, and the technology. That's right, economists are way behind on this, and you can catch up on that in our Cryptonomics report, where we talk about the economic effect and the coded economy, the coded digital economy that's been built in Bitcoin. And what we see is that blockchain and cryptocurrency is slowly but surely taking over all of finance. And you may remember this episode, France's Yellow Vest caused bank run to blockchain. We published this January 11th, and now you didn't see that anywhere in the news, right? Not anywhere in the fake news did you hear about anything going on in France, much less even the Yellow Vest protest, but how that people are actually, look at this guy, he's wearing a thing that says buy Bitcoin. France's Yellow Vest calls bank run the blockchain. Well, these next three articles are about to show you how effective what's going on in France by the people has actually become. In the first article we see, French Minister of Finance, blockchain is a government priority. France's Minister of Economy and Finance, Bruno Le Maire, has stated that blockchain technology is a priority for his country's government. As proof of France's commitment to the nascent sector, Le Maire revealed that the state plans to invest 4.5 billion euros or 5 billion in breakthrough innovations, including blockchain, in a bid to fight Chinese and American technological dominance. Aside from funding, he underscored that blockchain regulatory progress heralded by the PACT Act, which was passed by the French National Assembly earlier this week. In the interview, Lemire characterized the bill as an unprecedented and an attractive legal framework for token issuers and digital asset service providers. They're moving forward with blockchain in France faster than they ever were before, and it's because the people are pushing them to do so. They have to appease these people until it turns into a full-blown revolution. And in the second article, we see that France passes bill to allow insurance providers to invest in crypto and tokens. French insurance markets can now invest in cryptocurrencies following the passage of a new law. On April 11th, the National Assembly of France adopted a bill that is designed to stimulate local business development, including redirecting savings from individuals to businesses. Interesting, isn't it? Redirecting savings from individuals to businesses. We know that in the fiat system, as a saver, you're penalized. But in the cryptocurrency system, the cryptonomic code, it's a deflationary code, meaning that the saver actually gains purchasing power over time, unlike fiat currencies where you lose purchasing power over time. Known as the Pact, the act reportedly allows insurance providers in France to invest in cryptocurrencies such as Bitcoin with no limit on the amount of the investment. So what do we see? We see laws that are coming into play that allow French insurance providers to invest in crypto and in tokens and distribute tokens, and they're just moving forward one thing at a time. But that's not it in France. Another thing we see happening in France is former governor of French central bank joins board of directors of blockchain firm Setl. Well, follow the money, follow the talent. Where are the central bankers going? Where is everybody going? It's into blockchain, and it's all happening now at a very fast pace. British blockchain technology group Setl has hired former governor of the French central bank Christian Noyer as a member of its board of directors. Founded in 2015, Setl is a financial company with a focus on blockchain technology. Setl has built a blockchain-based infrastructure for institutional payments and settlements with a reported capacity of over 1 billion transactions per day. Pay attention to this right here. A blockchain-based infrastructure for institutional payments and settlements. That is where we are going in this next cryptonomic cycle. It's going to be an institutional cycle. Sure, institutions got in 2016 before the previous cycle. However, these were institutional service providers, the banks, the central banks, the ones who are going to allow these other institutions, these investing institutions, not institutions that are service providers like banks and money lenders, but institutions that are actually investors like hedge funds and family offices and pension funds, whatever type of fund that you have that's institutional and falls under the regulatory and fiduciary framework and guidelines for managing money at that levels. Those are the institutions that are about to hop into this next cycle. And we see France preparing for it, but not only France, we see it all over the world. And in our next article, we see that the United States legislators reintroduced Token Taxonomy Act to exclude crypto from securities laws. This is big news. This is litigation moving forward in the United States of America, the one place it takes longest to do so. Representatives in the United States House of Representatives have reintroduced the Token Taxonomy Act. The bill would exclude cryptocurrency from being classified as a security. The bill was initially proposed last December by Representative Warren Davidson and Darren Soto, and seeks to exclude digital currencies from being defined as securities by amending the Securities Act of 1933 and the Securities Act of 1934. The press release notes that the recent iteration of the bill would differ from that which was introduced last year. Notably, it clarifies the jurisdictions of the Commodity Futures Trading Commission, the CFTC, and the Federal Trade Commission, the FTC. The act also pursues the introduction of regulatory certainty for business and regulators in the U.S. blockchain industry, aka institutional investors, as well as clarifying conflicting state initiatives and regulatory rulings that have confused the issue. Representative Soto said it is time for the United States to step up and lead in blockchain technology. And he added, after months of public input, our Token Taxonomy Act and the Digital Taxonomy Act add critical definition and jurisdiction to create certainty for a strong digital asset market in the United States. This is an important step to promoting innovation and maximizing the potential of virtual currencies for the U.S. economy, all while protecting customers and the financial well-being of investors. So he wants the United States to be leading in blockchain technology, but look at the French. They're coming out and saying that blockchain is a government priority. They're allowing insurance providers to invest in crypto and tokens. The US has some work to do to catch up to the rest of the world, but this is definitely bullish that it's being reintroduced. There's been changes made. They're poking and prodding. It's a process, and in that process, things are going to be added, things are going to be taken away, but the goal is to develop a prosperous digital economy within the United States. And not only that, but also in the United States, the Securities and Exchange Chairman flags crypto as continued regulatory focus in latest speech. Speaking at the SEC conference in Washington, Jay Clayton highlighted the digital currency space while giving a broad overview of the organization's activities and roles. He said, in the digital space, the Division of Enforcement has brought cases that demonstrate that there is a path to compliance with the federal securities laws going forward, even where issuers have conducted an illegal, unregistered offering of digital asset securities, he said. The chairman continued, this path includes appropriate disclosures to investors so they can make a more informed decision as to whether to seek reimbursement or to continue to hold their tokens. Now remember, this controversy is not around what the CFTC claims is a commodity and what FINRA claims is actually a currency, and what the SEC is trying to say is a security, which is talking about Bitcoin. This is talking about ICOs, or initial coin offerings. These are not networks that exist on their own. These are ERC20 tokens or other forms of tokens that have been built on top of Ethereum and were used basically as a digital security, which is why they are classified as securities. So it's important that we know the difference between a commodity and a currency like Bitcoin and ICOs like Civic or other coins that raised money by distributing ERC20 tokens to investors who bought that token with obviously the thought that it was going to gain value in the future. Even if it was to be used on that platform, people would then seek that token to use that platform, and the demand on that token would yield a return. Therefore, these are securities. According to the Howey test, you're going to benefit off of somebody else's work, so it passes that securities test. It's been around since 1933. So it's important, again, to clarify the difference between the Bitcoin network and the cryptocurrency Bitcoin built on top of that network, which is taxed as a commodity, versus all of these ICOs, these thousands of what have been falsely called cryptocurrencies, but are really securities, hence the new term security token offering or tokenized securities, where we're saying, all right, we're not an ICO anymore, we're a company and we're issuing a security, but it's digital. So we want to be regulated by the SEC, we want to be known as a security, but we want to be managed digitally on top of a blockchain. That's fine. But you can't do everything a security does in an ICO and then not be a security. So that's where the big gap of understanding is. You can't apply all of the SEC's rules and regulations to a commodity like Bitcoin. However, it does apply to the vast majority of ICOs and utility tokens that are available on the market. So it's very bullish to see that the SEC is now differentiating between these two assets, realizing that Bitcoin in its simplicity is not a promise to benefit off of others' work, yet just a means of transfer of exchange. Whereas these ICOs that raised money from investors who were looking to invest in good projects with a hopeful return, they do fall within that classification, and that's what's being weeded out right now. And is it holding back Bitcoin? Potentially, maybe just a little bit. But as this understanding is clarified and the correct laws and regulations can be applied to the different classes of digital assets, we're going to see this market move forward very aggressively. And not just in France and the United States. We're talking all over the world. We could see it in this article. G20 to establish crypto, anti-money laundering, and counter-terrorism financing regulations in June. So we see that the G20 member countries will meet to discuss international cryptocurrency anti-money laundering AML regulation on June 8th and 9th in Japan. Per the report, and in accordance with official plans, G20 central bank governors and finance ministers will take part in the meeting. The event will be focused on establishing a framework to combat crypto-enabled money laundering and terrorism financing. Fancy that! The central bank governors and finance ministers will take part in the meeting of drafting the laws around the new system. Wow, who makes the rules around the new system? The people that pay for the system. And this is just being shown right here, that these people are so involved in the process of drafting laws, of financing the system, of organizing the system, of moving the system forward. Yet we see bluff calls like IMF Chief Lagarde coming out and saying, it's in between a fad and a revolution. Really? Well, when's the last fad that you've noticed, Miss Lagarde, that has shaken the entire financial system? I'm not really sure there's ever been a fad that has shaken the entire central banking system. This is a revolution, and it's happening right now. And I believe you know it, and that's why you come out and you make these statements. Further, according to Kyoto, it's expected that it was revealed on April 4th that the countries are expected to reach an agreement over new regulations during this meeting. Interesting. Usually these meetings go on and on and on and on and on, but they want to reach an agreement during this meeting. They want to move this forward fast. They want to tackle this now. And it says the report states that the main aim is anti-anonymity. Interesting. Very interesting, isn't it? Because if we read the Cryptonomics report, we would know that one of the three major problems, these very same people sitting down to draft these laws, these central bank governors and finance ministers, one of the main three problems they face in the current system is known as fungibility, meaning that the dollar or that fiat can be spent by anybody in the world. It doesn't matter if you got it from a tourist, from an ice cream truck, from the dollar store. The dollar is worth the dollar no matter who is holding it. That's called fungibility. That's called anonymity. And what we see here is the main aim is anti-anonymity. And that's what this new system does. This is one of the three check marks for these bankers to come in and say, for anti-money laundering and counter-terrorism reasons, we need to be anti-anonymous. We need to get rid of fungibility. We need to track people, see where the money's going, and that's going to keep everybody safer. That's their thoughts. That's what they're doing with this system, and we see it happening right here. The group is reportedly looking to establish stricter identification of individuals transacting in crypto at the moment of transaction to keep asset flow transparent. What does that mean? They want to take away your privacy to track the money. Why? To keep you safe, of course. Not because that data is worth God knows what, but to keep you safe, to keep the terrorists from getting the money, to keep the guns and the drug dealers from getting the money, right? We don't want that. We've got to keep you safe. And you just give up a little bit of your privacy and we're going to keep you safe. We promise you. What a lie from the central bank. And we see it coming to fruition. They even come out and say what they're doing. We don't come up with crazy ideas or theories here at CIA News. We simply look at the news, read the headlines, analyze the stories, and show you how everything that we are teaching and saying through our platform is coming to fruition right now. During the next 6 months is going to be the point of financial maximum opportunity within the cryptocurrency market. Get your ducks in line, get your dollar cost averages down, be aggressive with your accumulation of these coins, and as we go into this next cycle, you are going to experience growth of a financial market that may have never been experienced in the world before. And that's why we're here, to make sure that you know what's coming, you see what's coming, and most importantly, you're prepared for what's coming. So that's it for this episode of CIA News. Thank you for joining us, and thank you for your support.